97.5 CM FM, Concord, Boston. The Money Matters Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here. It is the day after the May meeting of the Federal Reserve Open Market Committee, and can best be summed up by my favorite Shakespeare quote, full of sound and fury, signifying nothing. And we saw this in afternoon trading yesterday, which was just a wild day, might I add, that we saw in not even a day, wild hour in markets. So Jay Powell gets up, he's got the purple tie on. Did you guys see the purple tie yesterday?
Not live.
Classic purple tie.
Yep.
Just nice, steady, nothing fancy, just classic. And the S&P 500, just before he was speaking at 2:20 p.m., was trading at 5,029.47. Jay Powell starts speaking, and the market says, "Oh, Jay's being pretty dovish here. We're going to rally 60 points, which is 5,084.47. It's lovely." And then we closed just below where we ended, where we started there, at about 5,017. So we round-tripped in a span of about an hour and a half. And I don't really know why, quite honestly. It was just noise. But let's talk about what Jay Powell said and also what he didn't say. First thing, Powell did not say explicitly that they were considering hikes, which is something that I thought would have been hawkish. She said, "Look, we're our next move is most likely going to be down. Like we're just going to have to watch what the data does, blah blah." But he did not explicitly say, "Hey, we might have to hike next time," which I thought was notable. Or not next time, but next move. So I thought that was somewhat notable.
And he was asked pretty explicitly about that
A bunch of times,
Yeah.
like at least 3, I think that I caught. Other things of note, not in terms of what he said, but what the Fed did. The Fed is making some adjustments to their quantitative tightening program. Did you notice this, Mike?
I did, yeah. Still continuing to sell off bonds, but at a slower pace was, I believe, the takeaway.
So here is what is going on, is that the Federal Reserve owns a whole bunch of bonds. The last time I checked, it's somewhere in the ballpark of like $7.5 trillion now in treasuries and mortgage-backed securities. And what the Fed has been doing is, as those bonds mature, because they don't just sit there, like they're all kind of creeping towards maturity, just like we're all creeping towards death. And so as those
Good
bonds...
analogy.
Exactly. That's when a bond matures, it dies, right? Like that's kind of what it is. And so as those mature, what the Fed has been doing is they've been letting $60 billion in treasuries mature each month without rolling them back into the balance sheet. So it's pretty much the balance sheet has been shrinking by about $60 billion in treasuries per month. And what the Fed said that they were going to do going forward is slow the pace of that maturation that they allow from $60 billion a month to $25 billion a month. And what this means, if you're looking for kind of the meat of it, is that the Fed is going to be holding, if you look at it over the course of a full year, do $35 billion times 12, they're going to be holding $420 billion more in treasuries a year from now than they would have otherwise, which means $420 billion in treasuries are not making it to the open market that need to be sold on the open market.
Meaning you're keeping longer-term rates lower.
Yes, supply and demand. Hey, if there are fewer bonds coming to market in the same number of buyers, great, yields can be lower because prices will be higher because there's going to be more competition for the remaining bonds. So, that's one of the things that I think you can interpret as dovish because, look, even with deficits, $2 trillion a year, $420 billion is still a big chunk of change.
Mm-hmm.
It's not nothing. Like that's a decent supply that Janet Yellen doesn't need to figure out, hey, how do I sell these? How do I place these? What do I have to do with this? So I think that's something that's meaningful there. So what we end up with, and where this matters, in my opinion, is not so much what's happening in short-term rates, because the Fed hasn't moved anything. They haven't moved anything in, 6 months now, I think?
Right.
The long end of the curve is where all the action is. And we've got a fascinating setup right now that's happening on the U.S. 10-year, where at the start of this year, beginning of this year, U.S. 10-year opened at 3.96%. Today, it's at 4.64%. But for the last month now, since, not last month, but almost last month, last 3 weeks, since April 12th, we've basically been between 4.5 and 4.75 on the 10-year. You've kind of been coiling in this narrow range for the last 3 weeks after, some meaningful volatility in rates over the last couple of years, quite honestly. And so this has provided a little bit of stability to markets now over that time, where the S&P 500 is basically flat over the last couple weeks after, some dips earlier in April. And so I think that this is one of the most important things that we watch here, as far as two things. Number one is markets. The second piece is housing. Which do you want to cover first, Mike?
Housing.
Markets or housing?
Housing.
Let's talk housing.
Market talk.
Yeah, let's talk housing here. According to Mortgage News Daily, the national average 30-year fixed-rate mortgage is at 7.41%. That's up from 6.6% at the start of the year. Mortgage rates have risen almost 1% since the start of the year. So, the next move that you see in the 10-year Treasury is going to have big implications for housing, because the 30-year fixed-rate mortgage tracks the 10-year Treasury pretty closely. If the next move on the 10-year is up to 5 to 5.25%, and you actually get 8% mortgage rates, nothing slowed down this housing market so far this year. You still have volumes that are moving up. You still have more activity. You've got more sellers. But we only touched 8% mortgage rates for 2 days in October of last year, the 18th and 19th of October. Other than that, we have not seen 8% mortgage rates since, you got to go back to 2000.
I'm surprised
it's been
it actually hit it
24
in 2000.
years.
Interesting. Okay.
If you were buying a home today, if you're a millennial who's, in their 30s, or if you're, bless your heart, if you're a Gen Z or in your 20s trying to buy a home today, you literally have never seen mortgage rates this high.
Right.
And it doesn't mean they can't go higher. I mean, look, they could in theory. I mean, a lot of our listeners will tell you, 1981, mortgage rates were 18, 19%. That was a thing. I don't think we're going back there because it's kind of different right now. But what does that mean for housing if you see mortgage rates with an 8 in front of them? Gee, that's a big psychological hurdle to get over, especially given where pricing still is. So that could be something that, does slow housing and potentially drive some recessionary impulses in the economy. That could happen. On the other hand, Mike, let's say that inflation data starts to look a little bit better. I know what I think, but what do you think happens if we go back down from 7.5% down to 6.5% on mortgage rates?
The market absolutely takes off and gets not nutty, because there's enough. There's now a big enough increase in terms of inventory to not make it like it was in 2021, but it probably goes pretty buck wild.
You get mortgage rates into the 6s, you're going to have more inventory because more people can sell.
Yeah.
It's great for volume and for economic activity.
Yep.
It actually probably hurts pricing a little bit because I bet sellers outpace buyers at first. There's a lot of people. I've talked to a lot of people that are itching to sell their homes, but they don't want to right now because they're like, I'm still sitting on these low mortgage rates. I don't want to take out a mortgage at 7.5 if I can avoid it.
Yep.
on the margins, you're starting to see fewer people doing that, so it's, there's more inventory, but there are a lot of people that are itching to be able to list if rates just get a little bit lower. So we're at another inflection point here, and we've, it's something where we've been seeing these kind of every 3 to 4 months, and this next one is on that 10-year that I think is really important to watch, because if it drives higher, I do think that could be something that drives a potential recession in the second half of this year. If it drives lower, then this economy is going to be cooking again by the second half of this year, in my opinion.
Yeah, I mean, to I guess really baseline set where things have gone over the last 6 months. October, November, December, you had these 3 months that basically showed inflation was printing 2%. January, February, March, you had data sets showing inflation was printing 4%. At first, on the Q4 of last year data, investors were taking it as inflation's defeated and the world is perfect. Then you had these 3 months, and there was a complete reversal, saying rates can't go anywhere and the job is not done. What are you going to get out of the next 6 months? That's really the end-all, be-all, right? And everybody has their forecasts, everybody has their predictions. Even Jerome Powell in the Federal Reserve is sitting here and saying, we don't really know. We think that it's probably not going to go so high that we need to raise rates, but we don't know. We have to wait and see. And I wish they would just leave it at that, hey, we don't know and we have to wait and see. This Federal Reserve has a bit of a bias towards telling you what they think they're going to do, which is lower rates. But I'll be the first to say, I don't know where we're going to go over the next 3 months in terms of inflation. We're going to have to wait and see if it goes and reverses itself.
Here's just something that I'll throw out there. You mentioned that, hey, you had this 3-month period where inflation looked like it was around 2. Then we had this 3-month period where it looked like it was around 4. Mike, what's the average of 2 and 4?
3.
Most of the models that I see right now.
2 plus 4 divided by... Yeah, okay, I got it.
I look, you did the math. I appreciate you doing that for me.
Thank you. It's live radio. I got to be careful with that.
Most of the data that I see out there in terms of how, people way smarter than me are modeling this are showing inflation that's consistent with a 3 to 3.5% long-term range. And maybe what we are getting here is just noise around that. And where I'm starting to go is that this rebound in inflation, it may continue. Like, you might see a few more months that look, kind of in that 4% range. But I'm starting to settle on the idea that, hey, maybe inflation's just going to run 3 to 3.5 going forward for, if you look at the next 5 years.
If I may pull a quote then from yesterday's press conference on that subject, Chuck. And
absolutely.
Quote, "Of course we're not satisfied with 3% inflation," Powell said. Quote, "3% can't end a sentence with satisfied."
Well, and that's because they've boxed themselves in because...
Right. I'm not saying that 3 to 3.5% inflation is the end of the world, but according to Jerome Powell, it is.
And that's the problem, is that in the 1990s, which many of us can probably look at as one of the 1 or 2 best economies that we've been in our lifetimes, you had 3% inflation. That's not the end of the world. The end of the world is like what we saw a couple of years. Well, even like that's not the end of the world. The end of the world is what like Turkey's going through right now with 65% inflation. That's really bad. I think that when we look at where we stand here, we may find that, hey, over the next 3 to 4 years, we might average 3% inflation, which means rates may not need to move up much, if at all, but you also might not have much room to come down. And that may be where we end up landing, is that it's just kind of sticky in this 3 to 3.5 range, which isn't necessarily the end of the world, but if you have a 2% target and you can never hit it and you never really try to hit it, is it really a target? Like, that's the question that I think we have to now ask is, what the heck are you doing, man? Let's take a quick break, and when we come back, let's talk a little bit more about what the recent action from the Fed means in terms of, we already talked mortgages, but let's talk a little bit credit cards, auto loans. We'll talk about those and some other consumer-facing areas right after this.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, Mike, let's talk a little bit about where things go on rates for a lot of financial products that listeners might be considering or might currently have at this point. Let's talk credit card rates at first. What are we seeing on that side of things?
Those are going to be the ones that are tied to specifically the Fed funds rate, and those ones are going to be staying as high as they have been. I don't know if you have the average outstanding credit card interest rate, but I mean, certainly
I do.
Oh, you do? Mid-20s would be my guess?
22.63%.
Not too far away, yeah. And I would imagine that just, a couple years ago, you were looking at an average that honestly wasn't all that much lower, but maybe 15% would be my guess as of like 2020 or 2021. These things tend to be outrageous in just about any interest rate environment, but a big uptick over the last few years.
So that's what we're seeing on the credit card side of things. Auto loans. When we talk about auto loans and what we are seeing there, according to data from Edmunds, the average rate on new car loans was 7.2% in March. The average rate on used car loans was 11.9% in March. Both of these up from the year before at 7 and 11.4% respectively. Car loans, they tend to track pretty closely the 5-year Treasury note. And the reason for that is that most car loans, think about how long they are. They're typically 3 to 6 years now. And so that 5-year Treasury yield is typically a benchmark for what you see on auto loans. Anything to add on that side of things?
Yeah, two things. One, I think that we should just reiterate this, that it's looking less and less likely like these rates come down this year. And so for everybody that's listening out there, when I mention that to people, they get kind of surprised, like, oh, mortgage rates are at 7.5%. And guess what? The latest indications are that they're not really going anywhere. And so if you're planning on that, please adjust your planning and kind of understand where things are looking right now. The other piece that I'll just mention about all this is interest rates on credit cards, interest rates on auto loans, mortgages. None of these things factor into the Bureau of Labor Statistics ways of measuring inflation. And I'm not necessarily saying that they should, but when you have Jamie Dimon the other day was talking about how the average American's doing pretty well, and he got roasted for it because a lot of Americans aren't doing well, and that's what I keep looking at is, let's say you are in that bottom 50% of wealth. I'm not even talking about the bottom 10 or the bottom 80, like the bottom half. You are going to be more susceptible to a lot of these changing interest rates than maybe the top half, right? If you're in that bottom half, you might not have a mortgage yet. You might be paying rent instead. You are more likely to have an outstanding credit card balance or to have a home equity line or some form of debt that is adjusting on an adjustable rate basis. And so you might be looking at these 3.5% inflation numbers and saying, well, hell, that's not my experience. And this is why I think this speaks to a lot of what we continue to see in terms of people's opinions on the economy and why they might not trust the inflation data is, if you have a credit card balance outstanding, not only has the balance probably grown because of inflation in products, but the interest rate and therefore the minimum payment on that credit card has continued to grow as well.
One other thing that I'll add just on the auto loan side of things, just from having talked to a number of people who work at dealerships, even if you are buying a car, new or used, in a lot of cases, there is a strong incentive for the dealer to finance that vehicle because they receive compensation from the financing arm in order to do so. Even if you're considering paying cash, if you have the ability to do so, take a look at the financing that's available and use it to negotiate yourself a better deal on the car. Make sure there is no prepayment penalty on those loans. And oftentimes you might be able to take $1,000 or $2,000 off the price of the car by financing it and then paying that loan off once it is in your possession. But again, make sure there are no prepayment penalties because if there are, they could eat through that savings. But just something of note there. Let's take a quick break. When we come back, Wall Street Watch is next, and then we're talking the jobs market.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Proper estate planning is crucial to you being able to enjoy your later years. And it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699 and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory at the moment, one day after the Fed kept interest rates steady as expected, where Fed Chairman Jerome Powell hinted it was unlikely the central bank's next move will be a rate hike. Wall Street is also readying for tomorrow morning's big jobs report. At the moment, the Dow is up by 0.5%. S&P 500 is up 20 points, just over 0.2%, and the NASDAQ is up by 0.2% as well. Russell 2000 is up by 0.5%. 10-year Treasury yield is up by 3 basis points at 4.62%. And crude oil mostly flat, edging higher, trading just above $79 a barrel. Shares in Boston-based Wayfair up by 11% after the online furniture retailer said its sales declined during the first quarter. However, the company narrowed its losses after cutting 13% of its workforce to start the year. Wayfair also beat street expectations on the top and bottom lines, while it saw its active customers grow nearly 3% compared to a year ago. Meanwhile, Moderna posted a narrower-than-expected loss for the first quarter as a result of the pharmaceutical company's cost-cutting efforts. Sales of its COVID vaccine also surpassed estimates. That stock up by 8%. Elsewhere, Peloton down by 11% after the struggling fitness equipment company announced its CEO Barry McCarthy would step down. The company also announced it would reduce its workforce by 15%. Chuck and Mike will have more on Peloton in the next hour. DoorDash down by 12.5% after the food delivery company posted a bigger than expected loss, in the first quarter. Qualcomm up by 9% after the chip maker reported a small increase in first quarter sales, saying its inroads into supplying chips to automakers helped drive sales. And after today's closing bell, we'll get another major first quarter earnings report from tech giant Apple. I'm Tucker Silva, and that's Wall Street Watch.
Mike, I want to talk about this piece from the Wall Street Journal. It's titled, "A Strong Job Market? ? Try telling that to these workers. Job seekers say getting hired is deceptively hard, and recruiters agree that qualified candidates are often passed over." Your thoughts?
I guess my first thought would be ask those same workers if they'd prefer this job market or the 2011 one. Everything's relative. Look, it's possible to both have a very strong labor market, which I would describe right now as a very strong labor market, that is also challenging for some workers. And there's a few statistics here that you can point to about how it may be challenging. 1 in 50 American workers jumped from one company to another back in March of this year. So that number is among the lowest in 3 decades. So the churn rate, which was really high over the last few years, has come back down. Employers, I think, are asking a lot more of their employees than they were just a couple years ago. They're having an easier time retaining. There is less of a pressure on increasing wages. But overall, again, and this is not me just quoting government data, whether you're looking at data from the U.S. government, whether you're looking at data from private payroll providers such as ADP, ooh, that was some alliteration, you're still showing a labor market that is quite tight in terms of unemployment and continues to actually add employees at a pace faster than we have people turning 18 years old. Do you have a different conclusion than me?
No, here's the thing. Look, anecdotally, I'm sure that there are people that can't find a job, that are applying over and over and over and can't get an interview and can't, get where they're trying to go. And I'm 100% sure it's frustrating. I've been there myself. I mean, I was in the middle of, 2009 when the world had kind of fallen apart. I was one of those people that had sent out, dozens of resumes, quite honestly, like close to 150, I think it was, by the time it was all said and done. And I think I had maybe like 3 interviews. And like it's hard. It sucks. I think it's challenging to try to extrapolate that and say that there is like a systemic problem in the labor market right now, because whether you're talking about government published data, privately published data, it's all kind of pointing in the same direction, which is that, yeah, the labor market's not as in favor of workers as it was back in 2021 and 2022, because that was just unsustainably hot. But, what are the pieces that we're going to publish when unemployment goes to 10? Are we going to publish, like, what do you even write at that point?
Yeah.
And this is the problem, is that I feel like in financial media there is active rooting for recession now. Like, it's bad, Mike. I'm really sorry, but it's getting bad. And it's not to say that things are perfect, because they're not. Like, it's possible to say, hey, inflation's too high, the job market's slowing. Like, you can say these things without having to make it something bigger that, oh, is this a sign of recession? No, it's probably not.
I think what is challenging for me is for someone to write a story about the challenges of the labor market while not acknowledging that the unemployment rate is at multi-decades lows, that the number of jobs added to the economy and wage growth have all seen kind of record-breaking numbers over the last few years and continue to maintain themselves. Again, you can say all that and acknowledge all of that while still acknowledging that, yeah, there are challenges. Like if you're a technology recruiter, it might be a more challenging market than you saw a couple years ago. If you worked in coding for a big tech company, you might not have the same skill set that they are looking for on the artificial intelligence side, and that can be dramatically challenging. But if you say all that and then don't acknowledge that, oh, and by the way, unemployment's lower than it has been for any time in the last decade, and multi-government and non-government sources really fundamentally confirm all of that, regardless of the revisions that you see on a month-to-month basis, then it just seems dishonest. One area that I'll say I think maybe overstating the tightness of the labor market, if I'm trying to cherry pick data and find some of this, the surveys that are done on the job openings. I'm starting to see more and more evidence, and this article points to the same thing, that companies are just keeping jobs open for a long period of time that they have no intent to actually fill at any point in time, because it's become so cheap to put a job out on a board.
Sure.
And so, yeah, if you want to take a look at that one data point and say, I don't believe that the number of jobs that are open, which as of March was 8.5 million job openings, I don't believe that data point is true. I'm with you. That's probably overstated.
Yeah,
and so any of the data points on people saying, hey, there's this many jobs open per this many people looking for work, those could be overstating the tightness of the labor market. But everything else, again, if we had a fundamental difference in where private data was showing versus government data was showing, I'd say, oh, look out, this could be a pivot point. But consistently over the last 12 months, both surveys that we get from private and governmental institutions are showing the same thing, which is overall, it's a pretty darn tight labor market. It might not be the job in your specific industry, but jobs are getting created at still in my opinion, very surprisingly fast clip.
Yeah. Anything else that you want to add on this?
No, I'm good with the labor market. Again, I will believe that we head into a negative labor market, a bad labor market at some point. But to acknowledge a point that you made, if you don't sit back and acknowledge when an economy is actually in some areas doing pretty well, then you're just being dishonest and missing the ball. Like I said before, plenty of areas of this economy that are uncomfortable for people. The level of inflation, especially for those that have outstanding revolving debt, is definitely one of them.
Sure.
But if you go honestly ask that person if they're as concerned about that as they are their job or their ability to get a new one in the future, the average person is not that concerned about the labor market right now, and I don't think we should be. I don't think that anybody really should be, unless you're in one of those key areas that might see some compression over the next few years.
No, we have to do a better job of keeping this stuff in perspective and just writing honestly about this, because there will be a time. It might be this fall, it might be a year from now, it might be two, I have no idea, but there will be another recession. We have not reached the end of recessions. And when it does come, if you're crying wolf the whole time, what are you going to write when you have unemployment at 8%? Because that is a bad labor market. And we're going to have that again at some point. Because it happens. You get over-leveraged and, overextended, and companies and households say, yep, time to tighten the belts, and you get a recession. It happens very frequently.
Let's just not pretend that it's happening right now.
No, there will be a time when you can say bad things there. But you have to be able to balance this stuff, and that's what I get to. It just feels like we're getting so freaking negative about, and I don't know if it's just because we have access to more data and we can see more stuff because of the internet than we used to. And, there's always someone that you can interview that's, has something bad to say. I don't know what it is, but it can't just always be bad. It can't be. There has to be some times when things are okay, at least. I'm not even saying they have to be perfect, but at least acknowledge that they're okay. Not, gee, the job. I can't do it, Mike. I can't. Let's take a quick break, and after this, Mike, did you know that there's been a trial going on between Google and the United States?
Kind of forgot about it, to be quite honest.
Well, Google's done a really freaking good job of hiding it as best possible.
They control all my search results. Of course I haven't seen it.
Not only that, but they also successfully appealed to the judge to basically conceal the trial from public because they were concerned about trade secrets getting out. No, the trade secrets from Google. Oh, we own all the ads and we sell all the ads. Great trade secret. Let's take a quick break. When we come back, we'll talk about that.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
A 2023 report from LawDepot.com shows that 73% of U.S. adults don't have a documented estate plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. You don't want to be a member of that group. Proper estate planning is a critical element to you being able to pass along your assets to your family and to enjoying your retirement years. If you want to avoid making mistakes that could prevent your family from benefiting from your financial success, then call our office today and ask for a copy of our new guide called Leaving a Financial Legacy. We tackle critical estate planning topics such as long-term care costs, estate taxes, and more, all from a financial standpoint. Call today at 800-393-4001 and get your copy of this free guide. 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Mike, so today and tomorrow, the Justice Department is sending its attorneys on the U.S. versus Google case, which most people probably don't even know has been going on because Google's done a great job of hiding it, to make their closing arguments. And then at some point in the next few months, the judge who's handling the case is going to rule on what to do.
And
we know nothing.
If history is any guideline, they will... I mean, again, big tech has done a pretty good job of, at least in the United States, dodging these types of lawsuits and the implications. The premise of the lawsuit is Google, over decades, paying Apple, as well as other companies, billions of dollars to automatically handle searches on web browsers, smartphones, etc. So Google effectively, and the big one being Apple here, paying them a lot of money to effectively not go and develop their own web browser, which would have competed with Google, instead saying, hey, preload all your phones with Google on there as the default search engine, and don't go develop one yourself. Kind of a win-win for both Apple and Google over the last few years. They didn't need to compete with Google on search, and they were getting paid to not do so. You can imagine how you can make the argument that that hurt consumers in terms of anti-competitive behavior, right? I think generally most understand that competition leads to a better product. But again, we don't know anything going on in this trial because, like you said, Google's done a pretty good job of keeping it hush-hush. How do you go and prove that consumers were harmed by the lack of a new product coming out? That is going to be the challenge, I think, for the federal government, is to prove that out and show that, yes, individuals were harmed because Apple or some other company did not develop a competitor to Google.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Chuck, can we talk about one more item on Google, or are you going to move on to something else?
No, you can do one more on Google.
Do you use Waze at all?
Used to. When Google bought them, I stopped because they stopped basically making
that
any
product
productive updates
sucks
to the products.
Now, that product is garbage.
I use Google Maps, though.
It's pronounced Waze.
So if anyone's not familiar, Waze was a competing navigation app, and mainly it was used it was kind of a crowdsourced navigation app insofar as people would report things like police officers, broken down cars, etc. And that still happens. The functionality of anything else on that platform to go and yesterday, for an example, I was trying to navigate to Play It Again Sports and just instructing ways to attempt to do that compared to just pulling open Google Maps and saying, yeah, show me the Play It Again Sports in Portsmouth, New Hampshire, and navigate me there. Basically unusable because of what you just mentioned. Google bought the product and effectively, without killing it, kneecapped it in terms of its effectiveness.
Yeah, I don't know if they've made any updates to it in like 8 years.
It's a borderline unusable product.
I want to talk a little bit about the Baltimore Bridge, the Francis Scott Key Bridge. Chubb, who is the insurer of it, is likely going to be making their full insurance payment of $350 million to the state of Maryland in the next couple of weeks. This is according to Henry Darr, the head of property claims for North America for WTW, who is the bridge's broker. Also, have you been following the salvage effort on this thing?
No, not really.
It's mind-blowing what they're doing. There's 1,100 people that are salvaging this thing. And one of the things that I noticed at first is I'm like, why are they not unloading like the cargo? The cargo ship is just still sitting there filled with whatever it's filled with. And I'm like, why are they not unloading this? And then I realized, if you unload the cargo ship, it's going to move, and the debris moves, and potentially you damage more of the bridge and make the salvage effort worse. So what they have to do on this thing is basically fully disassemble everything while keeping the cargo ship in place. Then, once all of the other debris is out of the way, then you can lift the cargo off the cargo ship and then try to move it back through the channel to get it, back to, the dock so that you can see what the damage is to the actual ship. But it's remarkable what they're doing on this thing. They did unfortunately announce yesterday they have recovered the fifth body from the salvage efforts as well. So obviously, I think it gets forgotten in this a lot that it's a very tragic event that happened here, but the salvage effort that's underway is just remarkable in terms of what they're doing with a ship of this size. We are going to take a quick break. Hour 2 is coming up in a bit.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts,
Can you tie my shoes?
in every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to 0. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to 0 due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the biggest assets that any family owns is typically the primary residence. How do you have to navigate how to leave that to the next generation?
Well, sure, and important because unlike, say, a bank account where you can leave a child as a beneficiary, that's not really possible with a home. And so, sometimes at least having just a basic estate plan, which according to a report from lawdepot.com, 73% of U.S. adults don't have a documented estate plan. But, that's the starting point here is developing an estate plan for your assets after you go.
Other things that you got to keep in mind, I think, hey, if you have multiple children, is there one that wants to inherit that home? And how do you balance that with the other assets that you might have so that children are being treated fairly?
Yeah, there's all sorts of concerns here, right? As I age, what if I end up in a nursing home? How do I protect some of that stuff? And let me just tell you, it is an area that has a high propensity for mistakes when it comes to how to handle your personal real estate, especially later in life. So definitely something to be aware of. Keep an eye on understanding not only the tax consequences of one action or another, but also the legal consequences of one action or another.
The guide is titled Leaving a Financial Legacy, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. Again, it's titled Leaving a Financial Legacy. You can request it at ArmstrongAdvisory.com or by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Little bit after 11 o'clock here. It's Chuck, Mike, and Tucker with you. The Dow Jones Industrial Average is up 184 points, about 0.5%. The S&P 500 is up 20 points, about 0.4%. And the NASDAQ is up 115 points, about 0.75%. So all three major U.S. indices are in their happy green zone today. We've got the 10-year U.S. Treasury up 3 basis points to 4.62%. Oil, West Texas Intermediate, continuing to slide, down another 17 cents a barrel to 78.83. The AAA national average for gas prices moving up, though. That doesn't feel good. This should reverse based on what we're seeing in gasoline futures probably in the next week or so, but we're now at $3.67 a gallon nationally. If you take a look at the New England states, Maine's at $3.64, New Hampshire at $3.57, Vermont $3.65, Massachusetts $3.60, Rhode Island $3.64, and Connecticut $3.75. That data according to AAA, or as I like to call them.
I don't know why I got such a kick out of that.
And we've got gold at up 40 cents an ounce to $2,311.40. Let's talk about Peloton.
Who?
Exactly. Their CEO, Barry McCarthy, who previously had spent time at Netflix and Spotify, came on board 2 years ago and said, okay, I'm going to try to turn this thing around. And the problem is that when you are a niche exercise product that was a fad because people couldn't go out of their homes as much as they wanted to, it's going to be kind of hard to turn that around unless you
start another pandemic.
Well, find another reason to lock people in their homes, you know? So it's just, look, I work out in the house. I love working out in the house.
Humble brag.
I know, thank you. Didn't do it this morning. But I think it's something where we talked about this at the time, where the world and our attics are littered with exercise machines that we bought, used for a year, and then they sit there just collecting dust. Why was this going to be any different? And the answers that people had were like, oh, like it's a community and it's connected and blah, blah, blah. And in the end, fitness trends are fitness trends. There's a new one that pops up every 3 years. First, it was Taibo, then it was Beachbody, then it was this, then it was that, then it was
7-minute abs.
What was then 6-minute abs came out, and what was the one where everyone was hurting themselves doing hang cleans? CrossFit. You know, it's like there's always a new one that pops up.
Yep.
And trying to make a long-term company out of this is kind of impossible, which is why the only publicly traded fitness company that has done anything is Planet Fitness, and that's because they've basically taken the opposite approach. And even there, the stock is pretty much flat for the last 5 years. It's not like it's, some, high flyer, cranking along or whatever.
So let's do the not fun math.
Hey, they at least figured out a way to be profitable and free cash flow positive. And you can't do that when you're selling niche exercise equipment that is a fad.
So let's do the unfun math for those investors who happened to buy it on December 24th of 2020, right before their really bad Christmas commercials.
Was that the year of the ad?
To lose weight, I think it might have been.
Yeah.
If you happen to buy it on that specific day, then you probably paid around $163 per share, and you have subsequently lost 98-ish% of the value over that subsequent time frame. So, I guess, and
here's the thing. One more thing on that.
Yeah, please.
It can get worse because the way that a stock goes from being down 98% to 99% is by losing 50% again.
Yeah. I mean, at $2.78, maybe somebody's going to come pick this thing up, I guess, but it's still a
Why would you
billion-dollar
wait for him
company.
to declare bankruptcy?
Yeah.
Buy the IP and the assets then.
That seems like a very likely path for all of this.
I mean, the company, its trailing 12-month net income, negative $871 million. Its trailing 12-month free cash flow, negative $249 million. Its liabilities outstanding, $3.069 billion. Its cash on hand, $737 million. They're going to be out of money in 9 months.
Yeah, and the CEO specifically mentioned that this most recent round of layoffs, which I don't even think we talked about, they announced that they're doing a 15% headcount reduction, getting the workforce down to about 3,000 people from a peak of over 8,000. Basically saying, like, hey, we needed to do this in order to be able to refinance a bunch of our debt that's sitting out there. And we've talked a lot about debt markets in particular and how companies like Apple are really well positioned because of all the debt refinancing they did back in the early 2020 stages. Companies like this are the ones to keep an eye out for, who probably, Peloton CEO Barry McCarthy, like most others going into the last couple of years, were anticipating rates coming down on debt, and suddenly finding themselves in a position where that's not happening and they cannot go refinance at attractive rates. This likely isn't the last type of story of a small company that we're going to see, whether it's a bank or an exercise company that has some particular struggles because of debt markets at this moment.
I'm trying to think if there's anything they could have done differently to arrive at a different outcome.
Sold to... The only outcome that I can think of is selling to another large fitness company back when things were going really well. And then it's just... At that point, it just would have been somebody else's problem. It's not as though that would have turned them around or anything.
No, I guess what I'm trying to look at is... I'm just going through the data here. I need to get to quarterly. Here we go. Let's do that. So in the most recent quarter that I have data for, just because I don't have the most recent, like the Q1 up to date here. So they had $743 million in revenue. So like they're generating $3 billion a year in revenue. Okay, which by the way is 3x what Planet Fitness does in revenue, because Planet Fitness charges $10 a month. So where is the money being lost? Like what's the deal here? Research and development, they're spending $80 million a quarter. It's not that. I mean, that's 10% of revenue. That's fine. SG&A, so selling in general, $391 million. Like, what are you paying your salespeople? General and administrative expense, $160 million. What do you have to do to run a company? All you have to do is make cycling videos and send them out to people. Not even send them. Like, when people turn on their bikes, they get shown there. Sales and marketing expense, $230 million. Like, what are we really doing here, I think, is the question. Cost of goods sold, obviously, look, when you're making, these bikes and selling them, okay, great, you got, $400 million. So there's a big chunk there. But
I mean, one practical thing that we criticized at the time that could have been done differently, they way overproduced these bikes. Right? You remember the CEO at the time, who was not McCarthy, who was, I think, Foley, the founder, saying, no, we really believe the trends that we're seeing in terms of sales activity during COVID are meant to last, and it's going to continue to expand. Like that was just a astronomically bad assessment of what was going on in the world at the time.
But they figured that out after one quarter. The second quarter of 2022, their cost of goods sold was $708 million, and they only had $678 million in revenue. So they were like, "Oh, we have too many bikes. This is a problem." And they've basically cut that down, so their cost of goods sold is half to maybe 60% of their revenue in any quarter since. So they kind of figured that out. But what are you doing spending $230 million trying to sell more? That's a huge expense. That's a 30-year revenue, and you're not growing sales. So there's a problem there. And I also just don't know what $160 million in general and administrative expense. What is that for? I mean, I don't really know what costs $160 million to do there.
What does a new bike cost these days? Because I was curious the other day when we were talking about Peloton. I found a used one on Facebook Marketplace for about $600.
Let me see. Hang on. I go to the bikes page.
I'm seeing one for $14.45. I'm seeing another one for $24.95.
Yeah, $14.45, $1,500 to $2,500. The treadmill is $3,000 to $4,000.
So again,
$3,000 to $5,300.
Taking a look at the secondary market on some of these things, you think your car loses a lot of value the day it walks off the lot. Take a look at the resale value on some of these bicycles.
I'm just on their page right now, and they have the Tread Plus, which is the expensive one, and under it in a little text, I thought it said cushion salt belt. I'm like, the belt is made out of cushion salt, but it's cushion slat. I guess it might be easier on your knees, but would it surprise you if a company like Peloton was like, no, you run on cushion salt?
Oh boy, yeah, this is a company.
It helps to provide electrolytes to your feet every time you touch the treadmill.
Just so everyone's aware, Chuck's making things up now.
I am, but if I were making a treadmill company, I would try to make the belt out of cushion salt.
Mm-hmm.
And it would be delicious. Let's take a quick break here. When we come back, we'll do a little bit of trivia. And then I want to talk about this piece from the Wall Street Journal. It's talking about mega corporations and how they don't necessarily have the monopoly power that they think they do. And I don't know if those facts are in evidence. So we'll talk about that when we return.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
If you want to leave behind a financial legacy for your family, you need a proper estate plan. Hi, this is Chuck Zodda from the Armstrong Advisory Group. In our new monthly guide, we'll explore how and why the estate planning process is crucial to help you build a plan that will afford you comfort and peace of mind as you enter your retirement years. The guide is called Leaving a Financial Legacy, and in it, we'll unpack ways to create a plan that takes into account your entire investment portfolio and your business holdings, including real estate. We'll also explore strategies on how to mitigate your risk from long-term care costs, which could affect you in the future. Call right now at 800-393-4001 to request a copy of our new guide, Leaving a Financial Legacy. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine-in only. Well, in case you missed it earlier this week, the DEA announced a recommendation to reclassify marijuana from a Schedule 1 drug to a Schedule 3 drug. Currently, 24 states have legalized recreational use of marijuana, including 5 of the 6 New England states. Looking at you, New Hampshire. The path to legalization got started in 1996 when the first state approved medical marijuana use. Trivia question today. Which state was the first to legalize medical marijuana? Once again, which state was the first to legalize medical marijuana? Be the 9th person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card tomorrow. 617-362-1385, and the 9th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Piece in the Wall Street Journal. It's titled, Why Megacorporations Shouldn't Overestimate Their Monopoly Power. The subheader is Embraer's potential venture into 737-sized commercial planes highlights how even companies in a global duopoly must innovate to survive. I don't think that's actually what's happening here. First, Embraer is only starting to explore building a jet that competes in the 737 A320 market. So they're
far away.
They're like 10 to 15 years away. Secondly, the problem is not that Boeing didn't innovate, it's that they built a bad plane that now has their buyers saying, hey, we don't know that we can trust you to deliver them when you said you're going to, and we need to look for alternatives. Buyers were happy to line up for the 737 MAX when it was announced that they have like 4,500 outstanding orders for this thing. It's not a case that buyers don't want to buy the plane. It's that Boeing can't guarantee that they're going to be able to deliver them, and so airlines are saying this is not good. On top of that, I'm going to quote here as well. Both Boeing and Airbus, which is feeling less heat because of its rival's crisis, have delayed the rollout of more fuel-efficient narrow-body jets until the middle of the next decade. That's not true. The 737 MAX is a more fuel-efficient version of the 737. It's actually why they had to redesign the MAX and why two of them crashed, is because they put bigger, more fuel-efficient engines on the MAX. They had to move them forward, which required them to put the MCAS system on the plane that tipped the nose down because the balance of the plane was now different from what it used to be, and that's why two of them ended up crashing, and they had to, go through that whole thing. So this is not really why Embraer is getting involved. It's not because the companies didn't innovate. It's because Boeing built a bad plane and now has shoddy construction practices on top of that.
So innovation might not be the right word, but would you agree that Boeing's monopoly power in some part led to the crappy plane that they designed?
No, I don't think so.
I kind of do. I think if you had to compete in a real way over the last decade, then you would have been a little bit more hesitant to lay off your generations of engineers with institutional knowledge. You would have been a little bit more focused on remaining competitive rather than remaining more and more profitable.
I don't know. Isn't one of the things that we lament in a lot of different industries amongst companies of all sizes that they lay off experienced people who, know how to do things, and they bring in people just to improve the bottom line, like cheaper people who replace them? That's not unique to Boeing.
Yeah.
It's unique in that Boeing has been uniquely bad at it in an industry that requires you to be uniquely good. But what Boeing is doing is the reason that I don't like MBAs. And I know all the MBAs listening just turned us off, but that's fine. The MBAification of business is, hey, I can cut my costs in this department by 30% by laying off the old expensive people, and I can bring in a bunch of young people that can do it for 2/3 of the cost without understanding how your bread is buttered. And that's not just a Boeing thing. Like, that's an everywhere thing. Like, isn't this like McKinsey's like day one, what you learn there?
Yeah. Yeah, I don't know. I have this sense that their power and their lack of competition played a role in that, but I don't know how to. You can't prove a negative, right? Had Embraer been competing and making the same planes this whole time, would Boeing have retained their employees for longer out of fear that they would end up going to a competitor? Yeah, I don't know. Don't have an answer there.
Yeah, I don't know, but I don't think what's going on here is unique to Boeing. I think what is unique to Boeing is in an industry that demands, quite honestly, pretty close to perfection. They just got even cheaper. Like they have had their Space Shuttle Challenger moment.
Yeah,
and unfortunately, it cost 300 lives.
Yeah, I mean, all of those. Sorry, finish the piece about people's lives because that's really the most important part.
Well, and this is the thing. As someone who loves air travel, the only reason air travel works is because as much as a lot of us might get scared getting on a plane, like I know a lot of people don't want to admit it, but we've all been there at one point or another where you're like, oh, gee, like that turbulence doesn't feel good. The only reason why we keep doing it is because it is literally the safest place that you can be is on a U.S.-based commercial jetliner. You have a lower risk of dying on a plane that is commercially operated in the United States than anywhere else on Earth. And if that starts to get chipped away at, even by just a few, high-profile things that, in the case of this door plug, didn't even kill anyone, man, that's the stuff that chips away at it quickly. And that's why it's so important to not have that happen in this business.
Served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line. We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the areas where we see a ton of confusion these days is with retirement accounts and leaving them to the next generation. It's just a complicated place right now.
Yeah, and to start, some retirement accounts were actually looked at by some as a really successful planning tool for generational planning, especially when you talk about Roth IRAs, for example. And the rules around that all changed just a few years ago. And so really understanding the taxation of these different assets is important when it comes to leaving a legacy.
When we talk about what goes into those retirement accounts, this has to be part of the thought as well in terms of minimizing taxation during your lifetime and that next generation's. You have to coordinate what's inside of them just to minimize the taxes during that time as well.
Yeah, so from that perspective, you have non-taxable assets like a Roth IRA. You have taxable assets that generate a 1099 every year. You've got traditional IRAs and 401ks. All of these have very different rules in terms of how they're treated, but the biggest change had to do with retirement accounts, specifically 401ks and Roths, and the rules that impact beneficiaries of those assets. And so if you're trying to utilize them as a legacy plan, important that you understand the new rules.
Our guide is titled Leaving a Financial Legacy, and there are 2 ways you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia question today was, which state was the first to legalize medical marijuana? That would be California. In 1996, California became the first state to legalize medical marijuana. 16 years after California approved this, Colorado and Washington became the first states to legalize recreational use in their states. Paul from Reading, Mass., taking home the Financial Exchange Show t-shirt. Paul's also registered to win a $100 gift card to Applebee's, which we'll give away tomorrow. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine-in only.
Mike, piece in CNBC today. Why your financial advisor may not give you the best Social Security claiming advice. How come?
Yeah, this study just quite honestly sucks and gives the industry that I work in a bad name for a very good reason. The study doesn't suck in of itself. It looks like it was a very legitimate study.
You're saying the results of the study.
Suck.
Yes.
The research was co-authored by David Blanchett, who's the head of retirement research for PGIM, and Jason Fitchner, who's the chief economist at the Bipartisan Policy Center. Particularly what they found is they looked at a subset of affluent households that work with any type of financial professional. That could be a broker, that could be an investment advisor, a financial advisor that charges hourly, buy assets, an accountant that charges hourly, any type of person that's advising you on your personal finances, and found that those that work with any type of financial professional tend to claim Social Security earlier than those that do not. And the obvious implication on all of this is that if you are an investment advisor or a financial advisor that charges based on how much you manage in the way of assets, or generate in the way of commissions based on the dollar amount of product that you sell, you want that person to take Social Security because then that means you have a larger bucket of money to advise on and thereby charge on, and goes directly against, the results of this study imply a direct contradiction with the fiduciary obligation that many financial advisors, not all, but many have. And like I said, the results of the study are kind of, again, discouraging and devastating insofar as that it's probably an indication of other big problems in the industry in terms of the advice that's being provided. And I think the question is obviously, okay, what do I do about this as an individual? And I think the only answer is to ask more questions. Right? Unfortunately, that's what you really have to do, is do your research on all this and ask, are you a fiduciary? What does that mean to you? What sort of conflicts of interest do you have? And, how do you give Social Security advice? What goes into that? What are the questions that you would ask when trying to help me determine all of this? A few red flags that I more and more frequently am seeing. If the advisor that answers that question has a blanket answer for everybody that he talks to, that might be a concern, right? Anything that is financial planning related should probably be customized to your specific situation. And there's a radio host out there who gives a lot of financial advice that is on a blanket basis, that some of which is cringeworthy, but he's one of those people that has a bunch of blanket statements about when to take Social Security, oftentimes towards the early end, and then some other stuff about, recently talking about how an 8% portfolio withdrawal would be sustainable for a retiree. Here is my point. This industry, unfortunately, has a history of not working in the best interest of clients. And I think that has made market improvements over time. But if you're not asking the person that you work with about their conflicts of interest and how they operate with you as the client, planning out your retirement and your future successes, then you're doing most certainly yourself a disservice. Shame on that person who's misrepresenting it or not fully disclosing how they work, but you're doing yourself a disservice. And if you have questions about your relationship with your investment professional and how they get compensated and how they work, you should call them or feel free to talk to the Armstrong Advisor Group and ask us how we work with our clients. The phone number here at Armstrong is 800 800-393-4001. Again, that's the Armstrong Advisory Group. You can reach us by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Wall Street Journal with a piece talking about the revelation, was it Monday or Tuesday of this week, Mike, when it became clear that Tesla laid off basically its entire charging network division of employees?
I don't recall. It was earlier this week, and seemed like a big about face given how many other automakers and, frankly, the Biden administration themselves were touting the expansion of charging infrastructure in this country. Seemed like a very rapid turn on the part of Tesla.
Not just rapid. There were a dozen supercharger sites under construction in Texas that had to halt because of this.
Mm-hmm.
They're not building them anymore. I don't know if that's permanent or if it's just a temporary delay, but they are under construction right now, and no one is working to continue building them. And what's interesting about this is, whether you like Elon Musk or don't, one of the things that you see in the EV charging space is that the Tesla network is by far the most reliable and most built-out network out of any in the country. It's not even close. And so this is something where, quite honestly, I look at it, and one of my questions is, hey, like this actually, especially with last year, all of the major EV makers, not even EV makers, all of the major automakers decided to adopt Tesla's charging standard as the new standard going forward. There were two different charging standards, and no one was using Tesla's prior, and they all decided to adopt it. So this was something where Tesla had a chance to build out a money-making product that they could use, basically as a utility, just to consistently generate revenue and potentially profit. And now it seems like they're moving away from this now for some reason, and it's kind of a startling about face, and it's unclear exactly what's going on here. So there's also this push now that the company is making towards unveiling their robotaxi by August of this year. I mean, we've heard this for 8 years now. It's been a while since we've actually seen any meaningful progress here, so we'll see what we get. But this is basically Elon saying, hey, I'm taking something that seemed to really be gaining some momentum and working well, and rather than, even you could spin it off or something like that and make it its own company. There are ways that you could have built this, I think. But he's saying, look, I'm going to go all in on robotaxis, and we'll see, man. We'll see. But this is basically where we are right now, and I said this for the first time maybe a week or two ago. I don't think Tesla is in immediate financial danger right now. But there's a path where if things go badly over the next couple of years, they could be in some real danger. And that's how quickly things can turn in the auto industry. And if this robotaxi bet doesn't work out, they may find themselves in a heap of trouble in 2025 or 26.
On the charging infrastructure piece, I'm trying to think of how hypothetically this might make sense if there's some strategy behind it. And you do have to acknowledge, right, there is nobody else that's even close to Tesla right now in terms of the build-out of their charging network. And so
it's the best, and yeah, it's amazing.
And so you do kind of ask yourself, okay, has Tesla just gotten to the point where they have such a huge lead that they can't afford to take the employees back and focus on something else? Because it's not as though Ford's going to go and try and develop their own new charging infrastructure, given the sudden shift away from EV demand from consumers. So maybe it's a reaction to that. It also, in my mind, could be, hey, look, the U.S. government's probably going to come in and try and subsidize this at some point if we keep going in this direction. So, hey, if we take a pause here, we might be able to gobble up some government dollars. I don't know. I'm just speaking hypothetically here about how this could maybe not be such a seemingly stupid about face. I don't know. I don't have any of the answers there. I just don't think that anybody based on this pullback that Tesla just had is, putting their fingers together, Montgomery Burns style, saying, okay, now's our chance to compete here with Tesla.
Monty Burns.
Let's take a quick
Montgomery.
Tomato.
Yeah, they call him Monty, though.
Nah, not in this capacity.
Well, some of us do.
Yeah,
some of us.
Didn't know you're on a
call
nickname
Montgomery.
basis.
Some of us just call him Mont. Let's take a quick break here. Let's do some stack roulette when we come back.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, what do you got for Stack Roulette?
In a new, particularly expensive and dumb way to die, you can rent the Up house from the Disney film Up on Airbnb, and they will actually hoist you up on a crane and have it float for you.
I don't get it.
Why do I want that?
I don't know. This is just one of many kind of gimmicky deals that they have put out there.
Is the listing actually posted, or is this just like an announcement?
I think it was just an announcement, but I could be wrong. They've previously done the.
It's posted now.
It's posted now, so you can go bid on this one, I guess. Yeah, it's a little bit gimmicky and silly, and I wouldn't want a house that I'm in to be hoisted up thousands of feet. I assume they'd make you wear a harness or something along those lines. But in any case, this is just one of a few different gimmicks that Airbnb has done to attempt to probably just gain website traffic. And my main question for the two of you is, what is your current most common habit when you are traveling these days? Because there was a period of time where I would default first to Airbnb. That is no longer the case with my family.
I thought you were asking like what I did when I traveled. I don't know
the way you phrased it.
Sorry, when you're booking travel and you're figuring out beyond the flights, where am I going to stay? What is your default search? Is it starting with a rental house? Is it starting with a hotel?
Depends on the experience, but probably a hotel.
Let's talk. I mean, we all have families, right? We've got young kids. So what's your default for your family travel?
I don't really travel.
It depends on kind of what we're doing. I would say in general with family it's probably 50-50 Airbnb versus hotel. If it is me and just the wife, I would say it's probably 98% hotel, just because when you don't have the kids you don't want to do any, like I don't want to take out the trash.
Yeah,
it's going to ruin a weekend.
Yeah.
You know,
yeah, I would say if it's group travel, then I'm much more defaulting to a home rental.
Yeah.
So if I'm going with a family reunion type travel, that's obviously makes sense in that case. Otherwise, the other piece though that just in terms of competition, I've been defaulting far more to Vrbo recently because they're owned by whoever. I guess Expedia owns Vrbo, Hotels.com, and they've basically aggregated all of those rewards point systems. So if I book a car on Expedia and book a home on Vrbo, I'm getting points in the same system. So I've actually backed away from Airbnb quite a bit.
If you could live in any house from any movie as an Airbnb, which would you pick and why?
Sopranos house.
I would like... Interesting. I would do Wayne Manor with a fully functioning Batcave.
Okay.
I am going to the Addams Family house.
Oh, that's stupid.
What?
Who would want to stay there? That's dumb, Mike.
Yeah, why would you want to stay there?
Completely disagree. All sorts of excitement going on the Addams Family house, and nobody dies from it. Like that
probably doesn't even have Wi-Fi.
Tunnel going down to the graveyard. Oh, come on.
Well, the Wi-Fi's dead.
Oh, what about the Italian vacation in house in Succession? That thing was unbelievable.
Yeah, that'd probably be okay.
Yeah, I would do that one.
No, Addams Family house in probably rural Pennsylvania or something like that.
Pee-wee's Playhouse, anybody?
Oh.
No? I think that could be fun.
Okay.
Let's talk about this piece from Barron's here. Portland, Maine, for the third straight quarter, rated as I don't know what it just says the top
U.S. luxury hotspot.
The top U.S. luxury housing hotspot in the United States, according to a Wall Street Journal Realtor.com ranking.
So this quarterly index that they do analyzes key housing market data as well as economic vitality and lifestyle metrics for the largest 60 metro areas. And the top 10 would indicate a high quality of life and those areas being expected to see future home price appreciation.
So here's the thing.
I don't know what they're measuring.
Like, Portland, Maine is one of my favorite cities in the country. And I'll tell you, if you're driving just up the Maine coast, I mean, some of the houses that you see, They're ridiculous. They're amazing. What is interesting is the rest of the composition of this list. The number 2 and 3 cities are Nashville and St. Louis.
Yeah, I was going to say, as much as Portland is one of my favorite cities, St. Louis is easily one of my least favorite cities in the country. So
St. Louis, well, here's the thing. I just don't equate St. Louis to luxury.
No.
Like, St. Louis has a lot of parts that are not, like, you don't want to
They're
go
quite
there. And
dangerous.
This is as someone who has gone there, like, no, like, you really have to be kind of careful about where you go.
Some of this must be something on predictive appreciation, because I would imagine real estate in St. Louis and Detroit, which is also on this list, have got to be pretty cheap. So I have to think that they're weighting something towards future price appreciation.
It's got to be, because a lot of the other ones make sense. Like San Diego, boom, like, sure, San Diego is like the West Coast, I get that.
And I'll even give Nashville. I'm sure that the luxury segment of that housing stock over the last few years has probably increased dramatically. So I'm not surprised by that one. But St. Louis, Detroit.
What kind of view are you going to get in Nashville, though? Like Portland, Maine, you got the ocean, you got the rocks, you got lighthouses, you got all the good stuff.
Yeah, I hear you.
What kind of view do you get in Nashville?
Well, you're not getting a view, but
I
you're
say this to
getting some of the best live music
Nashville.
in the world.
I'll honky tonk all day long, but that's not why you buy real estate. You don't buy real estate for the honky tonk. You buy real estate.
I would
for the
imagine
water.
some do.
You buy real estate for the water.
I would imagine some buy real estate in Nashville for the honky tonk.
Well, I don't know what the appreciation looks like there. Other places that look Boulder, Colorado, lovely, totally. Mountains, skiing, got it.
Minneapolis,
Santa Barbara, California, Minneapolis, too cold. Too cold. When your city has to build bridges between buildings because it gets that cold in the winter, it's too cold.
Got that mall,
Might be great for 9 months of the year.
Got that mall.
I know. I guess you could probably live in that, right? That's all indoors, right?
Oh, yeah. If you haven't been to the Mall of America, man, take your kids. Got an entire theme park in there.
It's basically an amusement park inside a mall, right?
Yeah. With also a very impressive shopping mall.
I'm not impressed by shopping malls. I got Amazon, Mike. What do I need a shopping mall for?
Hear ya, Chuck. Hear ya.
Let's see. Markets remain in positive territory. Dow's up 193 points. S&P is up 24. NASDAQ up 143. So a lot of green on the board thus far today. Mike, you know what's coming up tomorrow?
Jobs Friday.
Jobs Friday. We'll be here covering all of the information. Make sure you tune in. We'll finish out the week with the jobs report for the month of April. We'll see you then.